Rolling here, folks. We're going to talk about a few things. Number one, what's working in the current market? It's called whack-a-mole. We'll talk about that. We'll cover today's dead zone trades, 58,000 Netflix call spread, significant upside bet going into May's expiration. AAL, we talked about a huge print on AL about a week or two ago. That's being rolled, and they're getting more aggressive with it. And of course, SPY puts rolled up as sweep shows. Hedges continue to add bearish downside gamma. And that's the big deal. Yeah, it is Blake's birthday today. Guess I should have said happy birthday. He needed like a happy birthday shirt. If you guys know Blake, he's got shirts, at least for Halloween. Anyway, let's get rolling here. So who do we got in the house today? We got Carlos. Who else is joining us for today? Russell, yeah, so we've closed some trades today in glow sprints and ghost signals. We closed out SILJ. We closed out what else we closed today? We closed Iron out, and so we kind of talk about in relation to the strategy of whack-a-mole here. But anyway, who do we have with us? We got Mark, we got Brian, Leah Thomas is here, Tim, great, Brian and Brian SS, great, good to have all of you today. Wamucha, BS Smokey, all right. Let's get rolling here. So let's talk about what's working in this market. Erez was on. He closed out his first profitable trade in ghost prints today. So when we look at the market generally, I'm watching Dennison see if we can break out to the upside and get out. I'll tell you, it's not been easy. Like fills have been hard to come by, right? It's been one of those scenarios where you price in. So let me just share with this. This is one difficulty. This happened yesterday in Iron. It was going on today in SILJ. And let me just share with you kind of the experience that we're having at the moment. You're pricing at one level right here, right? So right here, I'm trying to close the spread out at like $1.10. And right here, it's pricing it like at $1.12. So I have my limit at $1.10, trying to get out of SILJ. And it's pricing at $1.12. I'm not getting out. And now some did. Some were able to get out at $1.10. In this area, I'm sharing where I'm trying to get filled in chat, in Ghost Chat. And so we're getting in this area, it's pricing like $1.12, and then it begins to pull back. And I'm like, okay, well, next time we run back there, we'll see if we can get filled at 110. Well, all of a sudden, I'm not sharing my desktop, am I? There we go. Yeah, there we go. All right, here we go. I'm not sharing my chart. So right here, right? It's pricing at $1.12. Then we begin to kind of pull back, right? We pull back here and it's holding $1.05 through most of this. It's at like $1.05. And then down here, it drops to 85. Now consider for a moment that we had a 36-38 spread. So 38's down here, right? Our spread is in the money. And, you think, we should be able to get out here, right? We should be able to get out. Frequently, again, volatility plays a factor, and that's the thing, right? That's what's kind of keeping us in this box here, is the volatility's expanding on the upside. And so we have a 38. We're already fully in the money. I would expect to be able to get out for $1. I mean, think about it. If you're buying a 36-38 spread, already fully in the money, and you're paying 85 cents for it. Think about that for a second, right? You have a spread that's entirely in the money and you're paying 85 cents. That's crazy. Okay. That's crazy. 85 cents right here is just downright crazy that you can buy a 36 and sell a 38 spread. Buy a 36, sell a 38 call spread. The entire spread's in the money and it's pricing at 85 cents there. Meanwhile, it was pricing about $1.05 right there, right? It even touched at 110 for a moment back here on 830. And then all of a sudden we dip a little bit here. Now we're pricing at 85 and then we start to break out here. Well, right there, we're pricing it about 95 cents. Well, they're giving us $1.12 before, maybe $1.10 priced at the mid back here. And suddenly we break out to new high. We're pricing at 95 cents. And then what happens? We roll up here, and on this little spike right there, it was pricing at $1.05. and I've got a limit at $1.10, and suddenly I'm at a significantly higher high here, and it's pricing at $1.05 at the mid, and we start to turn over right there, and I drop my pants and I drop to 105 and I get filled. Okay, and I got filled. Now, what's causing these dynamics? Well, so if I go to studies here and I go to load study set, I'm going to show you some implied volatility stuff going on right here, right? Implied volatility as we're moving forward throughout the day is going up a little bit. We went from about 75% up to it's only about 76%. Skew can be an issue, right? So all of a sudden we start to see those out of the money calls volatility go up more. This is average implied volatility. But when you actually look at individual per leg volatility, what ends up happening is this vol right here does not go up as fast as that vol. And so all of a sudden the 38 vol gets increases a little bit more than that one, and that's skew. So all of a sudden the difference in volatility, the vol diff increases. Well, as the vol diff increases, it makes the spread cheaper, right? If this is more expensive than that, it's probably coming in here just a little bit. So we're seeing out of the money calls being bid or at the money relative to in the money. That skew or the vol difference expands. The bid ask spread expands as well as the volatility expands. And the spreads right now are about 15 cents. And what's that one here? About, and that's pretty wide, 305 by 268. So at the end of the day, third here, 305 by 320, 15 cents there. So again, we're closing these. We're trying to close these out. Probably most of that's us right there in Ghost Prints. And so the point is that the fills are a little harder to come by right now. Volatility yesterday, for example, iron, the difficulty in iron vol was going up. We have an Nvidia earnings today, and you look back here, volatility was down here at like 113, ramped up to like 130. And I'm trying to get filled in here. Now today, the volatility comes off, right? We're down here 114, easily got a buck, even though the price really wasn't any higher today. Yesterday had trouble getting filled. So let's get back to the strategy that's working right now. All right. So let's talk about what's working in this current market. It's called whack-a-mole. Now, what does this necessarily mean? I gotta pay attention to Denison. We're trying to get out of Denison today as well as a profit. I'm trying to clear my March inventory off the board right now. And it looked like we kind of broke out. Thought we were going to maybe get it here. Thought if we got to 435, we'd get filled at our limit. It's back at 50 cents again. So we'll see if we make another run at Denison. But as we go back to the S&P 500 generally, we're currently trapped in a box. Why aren't you in back ratios? Because we have positive skew. Yeah, so back ratio. So on a bullish trade, back ratios work when what? So if we were looking, let's go to iron right here. Let's go back to SILJ. We added a trade in GLD yesterday, so I was trying to take off SILJ at a 40% gain. But if I look right now, notice something, right? This vol is lower than that vol, right? I'm buying this and I'm selling that. So I already have a built-in advantage, right? I'm buying the low vol option and I'm selling the higher vol option. This is what we call positive skew, right? Now, if this were negative skew, that's where the back ratio comes in. So if this volatility was higher than that one, I would want to do what? I'd want to sell that and buy two of these. Okay, buy two of those. So, but again, this is positive skew. Positive skew are great for call verticals, right? But that assumes that what? This vol skew remains constant. And frequently what happens is the price goes up, it doesn't really change a whole lot. But the last couple of days in iron, vol jumped a lot. Today in SILJ, the higher vol strike with the volatility is going faster than the lower vol strike. Does that make sense? Lower strike. So rising volatility always favors long call verticals. It does not favor back ratios. Back ratios are good when you have higher volatility here and lower volatility there. Does that make sense, Erez? So that's where back ratios come in. And so let's go back to the S&P 500. Okay. So if we look at where we currently stand in the market today, what are we currently doing? we're still trapped in the box, right? We're still trapped in this box here, this 3% range. 3% up, 3% down, 3% up, 3% down. Looks like we might be going higher to that upper end of the range, just below 7,000. Now, I've talked about some of the issues with what's happening right now, right? Some of the issues that are going on is that if you're playing a bigger move, it's not working, right? And so we've had this scenario when we're trapped in the box. If we just had one more day here, if we just had one more day here, man, things are really, really working. Okay. This is really, really working. Yeah. SILJ could have got higher yesterday. It was a 113. So Eric in Northport sharing that. And so it's one of those scenarios where, it's actually higher today, but the volatility's gone up, right? And so these are some of the complications that we have right now. So SILJ, for example, yesterday you could have got 213. That's probably near the high water mark of the day. And all of a sudden today, buck 13. And then today price is up and we're getting a buck 05. Some got a buck 10. The expanding bid ask spreads right now and the rising volatility or increasing skew in the case of SILJ, all of that stuff is making things difficult. So how are you adjusting right now in this market when we're seeing things get increasingly difficult? The VIX right now, VIX is dipping down to 18%, but not all is going down, right? We're not seeing volatility go down, for example, in SILJ. It's actually going up, and we're getting more skewed. Why? They're buying calls. But as we look at the VIX, we're still at an 18 VIX, and we're trapped in a 3% range for over a month. And so I've been explaining these complications here, not stocks, but SPX. I've been explaining these complications here, and it hurt the trades that we put on at the end of December and even the beginning of January, especially some upside plays. Because again, on this swing here, I just needed another day or two higher. I just needed about 7,000, and then we ripped lower. Then we made another run at it, but another run meant that we basically lost about 2 weeks of time decay, and making another run at the end of January didn't help us. We didn't need 7,000. We needed about 7,100. And then what happens? We've ripped it lower again. And then we make another run. I didn't need 7,000 at that point. Time decay is kicking in. Maybe needed about 7,200 for those bullish trades to get there. And then on the bearish side, yeah, we were able to close some bearish stuff in here, right? But then some of it, we were so close right here, we just needed another down day, another down day. Well, there's not much I could do with the stuff that we put on at the end of January, end of December, beginning of January. That's already in there, right? We were already priced. We have our strikes set. Not much you can do. And over the last several weeks, we've been really trying to engage in whack-a-mole, and I've been trying to take profits a little bit earlier, understanding the market that we're in. So for example, XLU, right? XLU, we took it off right there. Why? We're whack-a-mole, right? We're in a box. We got over a 30% gain. That's kind of been my threshold. We're in a 30% gain right there. And I'm like, you know what? I got to take it. And I thought about putting it back on the other day. We broke higher yesterday. We're high, basically flat today. I still think this is a good trade to the downside. But I am going to look for this to get just a little bit more extreme, and we'll look to kind of play this to the downside again. But we're up against the upper expected move right now. So if we got to break through that, that would be a decent bearish trade today, right? That'd be a decent bearish trade today. We put a bearish trade on XLE, right? The idea, hey, we're up against it. We're seeing some bearish option activity come in. We're right here, and we kind of dip, we popped, we dipped, and we're dipping again as we had the biggest inventory build, I think, in 3 years. Now that trade right now is only up about 13%, but we get another down day. We get down to 53. Our lower strikes at 52.5 down here. But if we see another down day and we get down here closer to 53.5 and we're up 30, 40%, I'm going to take it off. Okay. SILJ. Now, SILJ, again, I told you I took it off today for a 35% gain. We put it on last Friday on the 20th. I was trying to get a $1.15, lowered it to a $1.10, then lowered it to $1.05 and quickly got filled. Probably should have went a little bit higher, tried to get it filled above the mid. Maybe I could have got a $1.06, $1.07, but we got a bunch of people trying to get filled, and that was a pretty reasonable fill for a decent amount of trades to get filled at that price. But again, we got the swing. I was targeting 40. We got close in our Ghost Signals room. So there they don't get access to the console, but they get access to Ghost Hour, and I do a trade alert a week. We close that out for about a 65% gain because we just do long calls and puts in their stock, and we got out at about a 65% gain. All right, so what's working in the market right now? Let's go back. What's working are bullish and bearish trades, right? That's the idea of whack-a-mole. Bullish and bearish trades. But I'm looking to take it in that 30 to 50% profitability range for spreads that I'd normally be looking at a 70% gain. That's where I'm at. Hudson got $1.09 for SILJ. Awesome. Okay, awesome. Again, I mean, you can get better fills, right? LeBlanc did a strangle on Circle yesterday using a print, got 106% gain. Yeah, I'm not a big fan of, and I told us I'm not a big fan, but he get a big enough move. So he bought a strangle, got it 100% today, right? So we're using prints. We're understanding where the potential is, right? I'm doing another presentation tomorrow. So I do like 2 a week, just presenting to people, new people to ghost prints. And again, we're talking about this idea of a squeeze trap. Well, what's a squeeze trap? Squeeze trap is just identifying, is this a breakout or is it a fake out? Is this a bounce or is it a fade? The idea is, how are you kind of validating your entries right now? Okay. And the reality is, if you're not using option activity, you do have this tendency to fall in traps more, right? Where something looks like it's going to do one thing and it does something else. So what we're trying to do is we're trying to stack as much of the odds in our favor as possible. And even something like Circle, it's giving you it's tipping its hand. And again, LeBlanc took a strangle on it. And again, just saying, I think it's going to move big. And that's the whole point, right? By looking at option activity, we're looking at what? A gamma squeeze. And so maybe you have a chance to move outside of that range a little bit more frequently. Maybe those strangles can pay off, or straddles can pay off more because we got the squeeze. We're not running into a gamma. We're not running into the gamma wall. Okay. And so the point is that right now, again, you got to put as much of your odds in your favor. But remember, though, right? Incorporating option activity, like I'm about to show you on Netflix, it's not a certainty, right? It's about identifying the potential squeeze and hopefully avoiding the traps as much as possible. And that comes down to odds. But remember, your probabilities of success, okay? I can't even spell probabilities there. But your probabilities of success come down to what? Your probabilities come down to strategy, right? The strategy you choose will ultimately determine your probabilities. You're hoping that you can find some edge in the stuff that you're doing, whether it's out looking at option activities or ghost prints, whether you're, have some sort of volatility edge by trading in the direction of skew with a vertical. And I'm trying to stack as much of the odds as possible in our favor for the trades that I take and the alerts that I send out in ghost prints to try to put as much as that in our favor. But at the end of the day, it cannot overwhelm the probabilities of the strategy that you're choosing. But the biggest adjustment I'm making right now is not looking for what I normally look for is a 70% ROR on a spread trade until 2 weeks to expiration. I'm going to take it at 30 to 50% as long as we're trapped in this box. And that may mean that we take some stuff early and we could have done better. Oh, well, right? We're going to keep adding trades 2 to 3 a week, trying to identify these opportunities and taking them and taking profits into strength. And we're looking for a 30 to 50% gain. And again, on a long call trade, I'd probably be looking for 100 to 200%. I closed out SILJ today at 65% for Go Signals, a long call on SILJ, preempting our target at 40. We bought a 36. It was like over $2 in the money this morning. Just take it off. 65% gain. We're targeting 40. I thought I might roll it, but I wanted to get risk out. I didn't want to roll it out in time and up and strike. If I just went from 36 to 38, we could have taken $1.11 out, which was almost half of our risk. But right now in this box, the strategy is taking profits early. Okay. All right. Let's this move higher. Again, we're trapped in a box right now, right? The only way we're going to realize the downside, and that's why I don't like predictions, right? I mean, yes, we have to understand the downside risk is massive and it's there and it's hanging over our heads. But you got to be prepared to go long and you got to be prepared to go short. Okay. Again, XLE, it's kind of backing off the lows right now, but if that gets to 30 to 50%, I'm out. Just like I took off on XLU. I'm out. Why? Because we're trapped in a box right now. I just can't expect to get to that 70% unless we break out. And I got some, I don't have a lot of trades that are going to capitalize on this. But if the VIX keeps coming down, it's going to make it easy to do that again, right? But what else works? Okay, so before I hit Netflix here, I'm going to show you kind of today's I'm trying to say here. Today's dead zone trades. I was looking at Microsoft earlier when it was up around 400. Okay. But we've backed off a little bit. So let's take a look at Microsoft for just a moment. Again, this creates a downside opportunity as long as we're above the dead zone. And so where's the dead zone today in Microsoft? Showing Finder. Showing up. There we go. Where's the dead zone today in Microsoft? So let's look at the prices. Okay. We have a 321 dead zone. So again, that's algorithmic driven. So it's a genetic algorithm specifically for Microsoft, and it spits out a number. The number today is 321. So if we're in this zone between 385.56 and 388.77, there's no trade, right? The only way we trade is if we're above it. And notice how far we are currently above it at 397. Now, when do we look to take this trade? Right? The last 4 hours of the day. So right now at 10 o'clock at my time or 12 p.m. Eastern time, we're looking to do something in Microsoft. Now, at 397, our dead zone is down here at 388. That's based on yesterday's close. That's how far we are above the dead zone right now, 397. It's pretty extreme. But I also want to see an intraday extreme, which might be around 399 or 400. And we could easily get there, by the way, right? So that's our dead zone there in Microsoft. Now, things have adjusted since I looked at it earlier. So let's look at some other ones. I've got some data on Tesla. Tesla spiked early and faded. If we make a run back at 420, that'd be interesting. I've got data on NVIDIA. Got data on NVIDIA today. That one's really up against the high. So let's take a look at NVIDIA. So the idea is that this is something you can be very patient with. You don't have to rush out there, right? If you don't get a trade, it's okay. The dead zone, this is NVIDIA, is 193.50, which is right there. We're touching at 197 right now. 197 on NVIDIA. Okay, you can kind of see where we are in relationship to our dead zone. We're pretty dang extreme up here, although not as extreme as Microsoft. All right. Again, let's look at Apple here. We're trying to identify stuff that's really moved extremely heading into the last 4 hours. So we're kind of getting that range that's been developed in the first couple hours of trading. Well, I mean, Apple's not all that right now. We look at Amazon here. Amazon's not all that. And let's take a look at the Qs. The Qs were all that earlier. So let's take a look at Qs here. I'm going to download it and I'm going to bring it up here and I'll share it with you. Okay. So the Qs, dead zone 611, that's here. We're all the way up at 614 right now. Our high was 616. Okay. And that's a pretty wide dead zone there, isn't it? 686. Again, this is based on a genetic algorithm, right? We're over 20 years of backtesting here. Spits out the value. We look at the prior day and I structure a dead zone. In this case, a 686 range, and we're currently at 614. So if we're looking at how's Blake not on today? Blake's not on at this time. Blake was on earlier, but Blake's never on at this time, just so you know. All right. So let's get back to what's working right now. Did anyone take the trade yesterday? Blake was on. Blake was just off. He subbed for Professor Bierman, who's sick. Sorry. Anyways, he wasn't on the schedule here. So yes, Professor was stricken ill. Blake was on just before me. Yeah. All right. So we're saying, well, what's working in the current market? Did anyone take the trade yesterday? So yesterday I shared with you a QQQ trade, a whack-a-mole, sorry, not a whack-a-mole, but a dead zone trade at 609, 607. That got filled right there. And then we're out about 20 minutes later. Okay. So what's working right now? What we're seeing right now is intraday volatility, right? The ATR in the market's pretty dang high. And so I've been sharing a number of these with Ghost Print members, sharing where I'm trying to get, when I'm trying to get in and what I'm trying to get in at, and some of the ghost signals as well. But the idea is that we're targeting, yesterday we're targeting 67%. Liana got to 100%. Okay. And so I'm just sharing these in chat during my session, and I'm really kind of discussing it in Ghost Prints. Again, is this directly tied to it? But no, but this is something we're attempting to do. And I've shared about 4 of these. And again, one we made a small profit in, the other 3 we've made like 67%, 80%, and then 100% one time. And so the idea is that we're trying to play this intraday range and playing off of extremes. So as I look at what's playing out right now, what could be setting up pretty well right now? Well, NVIDIA could be, right? NVIDIA could be. Now they've got earnings after the close day. That can create some anomalies, but right now Qs is setting up pretty well. Microsoft, I thought Microsoft was going to be positioned pretty well, but we really backed off that 400 level. So what I really want to see is something back up against the wall, bullishly in this case. So let's look at IWM. We're currently at 615. So what could we do here? Yeah, you could trade 615. We also have to understand something about order flow, right? Order flow, I'm looking at a 1-minute chart right here, and typically I look at a 5-minute, but the idea is that if you see a bunch of order flow come through quickly, the price can spike pretty fast, right? And it's kind of like a St. Bernard coming through a doggy door, to borrow a Jeff Foxworthy description here. But you can kind of get that, and the price pushes, and then boom, it comes off. So that's kind of what we're looking for right now. So on the Qs right now, I'm saying, okay, hey, if we can get a pop back up towards 616, the upper end of that kind of opening 2.5 hour range, that could be pretty attractive. And if it doesn't get there, it's okay. Just back off, right? So the point is, we look at this, I can say, okay, we're looking at playing the downside because we're above the dead zone, right? We're currently at 615. What about 616? And we're just going to buy a $2 wide spread vertical, and it's going for 96 cents right now. Now, I got a choice. I want to get in for about 65 cents or less, and ideally 60 cents or less. And if I could get into 50, that would be pretty good. But what's the pricing? We're at 615 right now. What is the pricing right now for that one? Deep and wide, 1-2 strike vertical. It's pricing about 76 cents. I don't think I'm going to get 50 cents here today, right? I don't think there's enough skew to be able to price and get in at 50 cents if we end up reaching 616, because we're a little bit off 615. If we get up here a little bit above it, we should be able to fill at 60 cents on this spread. But I'm looking for a little bit of a spike higher towards 616. So I want to change that to 616 and 614 there. Now, if we target 616 up here and we're targeting a 60-cent debit, and I'm okay not getting filled, right? I'm okay not getting filled here. And we get a 60-cent debit there. Now what happens? Now we're looking for the price to go down. So we're going to get filled into strength. We're looking for the price to get down, and we'll need it to get down, depending on the time of day, somewhere here where it is currently, somewhere below 615, maybe 614.75. So if we can spike to 616 and come back at some point during the day to 614.75, I would be able to get out of this trade at trade opposite order. I should be able to get out of this trade at $1. Okay. So that's the setup here. Okay. Now, Rez, but here's the point though, right? Understand order flow. If we see some order flow coming into the Qs or Qs related stocks, we're looking at a 1 minute chart here, right? That order flow is going to drive it up, right? It's going to drive it up. And again, if we can get to 6.8, we may push through 6.16. But I'm not looking at 10 o'clock. I'm saying in the next 2 hours, can I get this filled? So in the next 2 hours, can I get 60 cents at 616-ish? So again, we're not looking at the chart. We're understanding where the trade is dead. We're understanding where the trade is viable. And this is a what? This is a counter trend strategy, right? This is a contrarian mean reversion strategy. And all we're looking is for a little bit of disjointed activity coming in. And again, when it gets pushed through in a minute or 2 minutes or 5 minutes, the price can move fast. Then we're in at 60. And then all we have to see is we back off from that just a little bit. Now we're out. Okay. So Erez, that's perfect for this trade though. So if you're saying that this is showing weakness, it doesn't mean we can't pop here, does it? So you're just confirming that this is even a better trade. All we got to do is pop to 616 and we're in. And that pop to 616 can easily happen, right? And it doesn't have to necessarily pop. It could migrate. It could meander. But if you're currently seeing weakness, you should like this trade, because if we pop to 616, you get in just because we have some order flow come in and then it backs off it. That's awesome. That's perfect, right? And so again, I don't mind. And again, I don't read a whole lot into a 1 minute chart, right? But all I know is that we're above the dead zone. We're kind of at the extreme edge of that first half hour, but really we're looking at the first 2.5 hours to kind of shape the trade. And then we're looking at just a move to the upper edge of that, and we're playing the reversal. So, but here's the thing though, is that you have to, but validation with technicals, but again, what strategy you're employing, right? This is a mean reversion strategy, right? So yeah, it's one of those things that we're basically fading the high there. So again, you'd use different types of technical analysis, but I don't mind you think, hey, I think this move is weak. Now it may flip on its face if we get to 616 though, right? The technicals can flip and you say, oh no, I'm bullish. Yeah, but you understand we're using technical analysis here, right? And we're using 20 plus years of and 2 years of forward testing to derive what I shared with you in terms of the image, right? The dead zone. Okay. So this is what we're looking for. We're looking to get in for 60 out at $1. It's going to take a little bit of rally to get there, and I'm okay if it doesn't. But if it does, we may push through a little bit. Then all we have to do is come back to about 614.75. We're done. We're out at $1. Okay. All right. So So lots of trade. I'll kind of share in our rooms there. Yeah, and these can be very, very short duration trades. I mean, the two this week, they've been like, literally 20 minutes or less. Put exit in there. I gotta get cracking here, don't I? Anyway. Now I get the question sometimes, well, what if I have what if I don't have 25,000 in my account? What are the ways around the pattern day trader rule? MACD turn pause on Microsoft. Good. Again, you can look at more than one. We get back up here to 400. So let's work through setting something on Microsoft here, right? So if we get back up to the high Microsoft, that's at 400 up here, right? How can we structure something? $400. Again, it's going to be a bearish trade. It's a 250 wide spread, and we just buy a single wide, just single spread here. And what's the price that we need? I'd want to get it. I'd want to get it at 65 cents. You could pay more than that, but again, I'm gonna go 65 cents. And what's the pricing right now? Let me look. 696. What's the 695 going for? Going for 39 cents. I think we can get 65 cents. So I think if we get up to 400, I think it's very possible we could get 65 cents on it and just try to get out a buck. You could shoot for, in this case, $1.25. Okay. 250 wide spread, $1.25. Where do we need to get? So if we touch 400, we'd need to get down to about 298.75. No, 298.50. So if we can touch 400, and get in, we need about 298.50, maybe stretching a little bit lower, 298.25-ish, somewhere in here. 298.25. We need about 298, 398. So if we can get to 400, we can get down to 398, maybe slightly below that, you're out at $1.25. Right? So that's Microsoft right there. In at 65, out at $1.25. Not quite 100% gain. We're close there, right? But again, we're not looking at playing a trend for today. It is positive for today in Microsoft, right? So all we need is just a little bit of bullish swing, a little disjointed price action. We're in. So that's the dead zone for today. So again, going back to what's working right now. So again, we're trying to take profits a bit earlier. We're also taking intraday swings. And so that's what's working, right? In this current environment. Now, if we break out of it, we will have to make adjustments, but we're always trying to make adjustments a little bit, but it takes sometimes a little bit of time to really play it out. All right. So let's look at Netflix today. Now, what do you folks think about the technicals on Netflix? What does your technical analysis say on Netflix right now? And understand is that technical analysis is not some sort of just there's one style, right? There's one thing. It's not a monolith, right? When you think in terms of strategies, right? We have trend reversal type strategies. Trend reversal can be in the form of basically fading, right? You're not looking for any confirmation at all, or it could be based on a breakout, right? That's a trend reversal. There's trend following. Right? And you might say, okay, well, I'm getting in on a bounce or I'm getting in on a breakout, right? Technical analysis is not a monolith. Alex is drawing his threshold at 85. Okay. You have just mean reversion systems, right? Okay. You can't argue it is breaking a downward trending line, right? intersect the last two highs here. What do you have? Right? Wrong one. So it is, I know we haven't closed there. Well, actually, we haven't yet. We go off the highs. Now, if you extend back further, and you could argue we are breaking out today. So it depends on, do we do the last two? Do you overlook something? Okay. Even weekly close. So again, what system are you doing? Is it a trend reversal system where you're fading or breakout? Is it a trend following where you're doing a bounce or breakout? Is it a mean reversion system? Again, technical analysis is not monolithic, right? What if I showed you this? So we're going to go back to the Ghost Print Surveillance console, and I'm going to type in Netflix here. This is a large block trade that's showing up today. And you'll notice this is a spread trade, and we look at location here, and we got the above bid. So they're buying the 90. How do I know they're buying? Because it tells me right here, locations at the ask or at or near the ask. You can see we got 59,000 contracts there matching, and they both triggered at the exact same time at 15,000, and they've added to it throughout the day. It was actually a sweep. It's a spread trade. They're buying and selling calls, but they're buying the 90 and they're selling the 105. That's what that tells us, right? We've talked about this before. Okay? We've talked about this before. With these types of prints, you get a symbol, you get a direction, you get a target, and you get a time frame, right? So all of this information gives us all of that, right? The symbol is Netflix. The direction is bullish, right? The target is what? Target's 105. At a minimum, 95, right? So we're looking at 95. Depends how aggressive you want to be, 95 to 105. And the time frame is by May 15, right? By May 15. Can you use this information to structure a trade? So using all this information here, is this enough to structure a trade around it? Yes or no? Is this enough information to structure a trade? Yes. Okay. And so this is something when people are looking at these prints, they're saying, well, how do I know if it's a trade? Well, this is the information you have, right? And they're doing 59,000 contracts all at the same time. Let's click on location here. So if I sort by 100, notice all of this filled at the same time. It's called a sweep, right? 15, 15, 16, 69, all the same trader. That's why we call it a sweep. And 59,000 contracts. That takes some conviction, right? To buy a 26 delta for May 15. So you should be able to take this information and structure a trade. And if you can't, it's not the console's fault, right? It's just that you're not experienced enough to know how to trade, right? And that's okay. We can teach you how to trade, right? That's what we do. But I also teach you a repeatable methodology. Now, here's the question. Is this technical analysis? What do you think? Is this technical analysis? And just so you know, I was a subject matter expert for many years in the CNT Association. In fact, I was in the final interview to be head over the CMT exam. The only way they're going to hire me as the head over the CMT exam was if I had to move to New York, and I didn't want to do that. So the board's like, nope, we're not going to hire you. Some of you saying no. This is an emphatic yes. This is an emphatic yes. It is technical analysis. Technical analysis looks at something called money flow, right? Right? So if you're looking at short interest, you're looking at insider trading, you're looking at option activity, yes, emphatically, this is all technical analysis. And did you know in the curriculum, don't tell Don, expected move is in They call it expected movement. Expected movement is in the curriculum as well. Expected movement is technical analysis, and we actually talk about it. I've written exam questions on expected move. Okay. So, yes, you would fail the test if you took level 3 exam questions on expected movement. I remember like a number of years ago, I went through all of the level 1 questions and all the level 2 questions. And then for years, I was writing a level 3 exam question, which is like 5 to 6 parts. Okay. This is emphatically, if you consider money flow at all, this is money flow. And actually, it's more significant than money flow because this actually can create upside pressure. There's $15 difference here, right? And so what happens is that $90 call here and the 105, there's a pretty big gap here. This does create upside pressure in the stock. Now, it may not be immediate, and it is a spread trade, so it is limited or capped. But if we go back here and I click on Netflix, we can see I filled at 9:45, 15 minutes after the open. Where's 9:45? It's right there. Okay. So that's where it got filled. We did see positive movement, but again, a spread is more limited. But again, it's a big trade in a bullish direction, and it does have upside gravity and pressure that just looking at money flow doesn't. Okay. Money flow is one time. So if I look at a big trade right now, if I go to Trade Flash here and I can see, okay, well, a bunch of stuff in here. So I can see if there's any big equity trade. But if I saw a big equity trade in Netflix, if I see a conglomeration of volume at a certain level, it doesn't exactly create upside, right? So for example, if I put on volume profile and I felt volume profile was right there at 80, and you can say, well, I broke 80, so therefore we might go to the next, and let's say the next level is at like 92.50. You're saying, I think it's going to go here, just based on past trade that's occurred around that kind of 92.50, 94 area. The reality is there's not any force that this prior activity is applying. There is force that's being applied at 90. Okay. Does that make sense? Is that we're actually, if we're looking at equity inflows and outflows, money flow, that doesn't actually move the price. We're just saying there's a pattern and I'm expecting it to continue. Buying call options actually moves the price. So again, option activity is technical analysis, and it does or can have an effect on the price, particularly if we can get towards $90. This increases the positive feedback loop by virtue of market maker hedging because they're short calls at 90. And so this creates upside pressure to and through, but it's going to be limited at at 105. So if we're looking at the current trend right now, what other technical analysis could I apply? I could actually apply trend or targets based upon what? Past retracements. So if I go back here and say, well, here was a bit of a downtrend, reversed, consolidated, then broke down. If I look at this past move back here, I can take that as a longer term trend seed wave, getting me down to 261.8. This would be the long-term trend target for Netflix to the downside. There is potential of going lower, but we're in this target zone right now, right? For Netflix. Now what can we do? I'm going to remove that drawing and say, look, we've exhausted this seed wave in Netflix back here at 75-ish. Well, now let's go the opposite direction. Let's draw a retracement from the beginning of the trend to the end of the trend. 97.75 is a 38% retracement. 104.70 is a 50% retracement, and 111 is a 61% retracement. If this trend corrects, we could reasonably target 97 to 104. By when? Well, in this case, by May, because that's the trade that's on today. They bought the 90 and sold the 105. Does that make sense? So as we look at this, say, okay, well, I can't really set a target yet based upon a seed wave. Sorry, I got to auto zoom here. I can't really set a target yet because this move hasn't ended, but I can click here and say, okay, it would at least give me 95, right? 5 wave pattern, 1, 2, 3, 4, 5, $95. That gets me on that 97.75 target. But again, this move is not completed yet. But at a minimum, we're looking at around a 95 target. So how would we trade Netflix? Again, our spread is 91.05. We have upside pressure to and through 90. Our 38% retracement is 97.75. And just based on this seed wave here, we're looking at about 95 as the target. Yeah, so Rick, that's what I just showed you, right? So the question, how do you find this stuff if not here? You don't. Okay? And it's about 59,000 contracts all trade at the same time as a sweep on Netflix. This makes it easy. Fish in a barrel. All right, so Wayne number 2. I don't know who Wayne number 1 is, but we got Wayne number 2 says 90.95. All right, so this gets down to strategy. Right? This gets down to the strategy. So for me, the way I look at this and saying, I'm not necessarily married to have to go to May. There's 79 days left there. But for April, not bad. I normally like 30 to 45 days, but getting to the monthly gives me a little more liquidity and a lot of more depth. We got $2 wide increments here going out to $1 wide. Well, 1 and then 2. Because we had $5. Then they gave you $2 wide. So where would I go? I would look at the 40-ish delta. Now, I also need to check the volatility skew. Now, 43.8, 43.6, see how volatility is falling until we get out here closer to 95. But 95 doesn't work for me, right? To buy 95 out here and sell out of the money doesn't work. So I've got to see, okay, 40-ish delta, 38.4, 38.6, 43.3. We're actually diminishing a little bit there, right? Not a lot, but a little bit. So how could so I'm going to look at the pricing on this 43 delta. What is that actually costing? Buy deep and wide. So actually, what was the strike width here? 86.80. It's actually buy one, buy vertical. It's a 73 cent debit on a $2 wide spread with the 43 delta. So we can look at this. There's not much of a difference there between these two. It's a $2 wide spread. I would say that's pretty reasonable. Buying an 86 and selling an 8. Now, I don't need it to, in this case, I don't need it to go 95. 88, do I need it to go to 88? Well, what's the volatility right now? So if I look at this and I go down, what's the implied volatility? Currently, we're in the 48th percentile right now. We got 18 to 76. We're currently at 46. So if the price goes up here, what would we expect volatility to do on Netflix? So volatility is pretty peaked up here, right? I mean, we're pretty high. So if we get a rally here in Netflix, what would I expect implied volatility to do? Go down or go up? What do you think? If the price rallies, Jay Patrick, I always thought it was charts. That's one element, right? And in actuality, I mean, charts, we include charts in every kind of aspect, but actual chart patterns, technical indicators, it's a small part of the actual exam. Yeah, volatility should go down, as Tim says. So vol should go down. Does that help us or hurt us with a long call vertical trade at 86.88? If we can get to 88, does declining volatility help us or hurt us? So if we get to 88, does decreasing volatility help us or does it hurt us? So we're buying a call vertical 86.88. Tim says help, and he's right. Okay. It helps us. And so at the end of the day, right, long call, like vertical spreads, it does the Vega effect theta is not stagnant. Okay. It changes as price changes, or sorry, as this trade goes from out of the money to in the money. So right now, a drop in vol will hurt us because we have an 86.88. But if the price goes in the money, then it helps us. So what's going to happen here is that as we move towards 88, it's going to improve our profitability as volatility falls. We may be able to get out at 88, right? And that could happen tomorrow or a week from now, right? Now, we still got a fair amount of time because this is a May expiration down here, right? Oops, I deleted it. Sorry, it's an April expiration. So it's the extrinsic's not going to weed out, but we're also not searching for a max gain. So it helps us. And if we're paying, this got the wrong one, 86, 88. If we're paying 73 cents, what are we looking for on this? 0.73 times what? 1.7. Okay. I would look for a 70% gain on it because that could readily happen, right? And just look for it to get to 88. If you're not quite at 70%, take it off, but 0.73 times 1.7. You're looking to close that out for $1.24. Our maximum potential is $2. We're not going to hold this to expiration to get to 2. We're going to take it at $1.24. Or if we get to 88, take it off. All right. So I'll share this with you. I'll drop it in chat here. So if you're in ghost prints, you may look for something on Netflix here. Or ghost signals, right? But that's what I'm kind of sharing right now. We'll kind of drop it in chat. Okay. But that's a very, very big trade. Now, let's talk about another one. And I've got a lot of time here. We're not going to get to SPO. We'll talk about AL. Now, previously, we talked about a trade in AL. Right? We previously talked about a trade in AL. And it was back right there. It was 47,000 contracts that were bought in AL. Well, guess what? Let's look at the console. Let's see what's going on today in AAL. And what you'll see is a very significant, sizable trade. 47,000 contracts again, bought in what? Bought in one trade, right? So someone came in about 47,000 contracts in one trade. All right, now if we go to toss here, and it's not necessarily that we know this, but I think it's still not bad to know, and we're working on adding the roll indicator in there. But notice that they have the 15 and 16, right? So which one's closer to the current price? We're at 13.25. The 15's closer. Both of these filled at the ask though, right? Which is okay, but it's still what? We're going back here to 20 March. That one right there is the trade we tracked previously at the 16 strike. It's being rolled down to the 15 strike. It's being done as a debit. The delta is going up from 10 to 19. So to me, rolling down, rolling at a debit, increasing the delta. Okay, this is a gutsy trade because they took it here, took it there, broke down. Now we're rolling up a little, but they're rolling it from 16. They're rolling it down to 15 at a cost for the same expiration. Now, again, are you bullish on AAL? What do you think? Are we bullish on AAL today? Are you willing to go long AAL today? Now, you may decide not to. You can certainly wait. Okay, I'll wait to see if it breaks through the last 2 days high. But we have a target price of 15. Brian's got a 14 call. Great. And again, to me, that rolling that down, now the delta increases. The pull of 15 now is greater than it was at 16. And it's even greater than it was last week here. Now, how can we trade it though? Okay, $15 strike price, target price, 51 days out, 36. The spreads they were okay in here. But with the volatility, if it does come down, but the spreads are way tighter here. So to me, I would just come in here. Do we have upside volatility skew? No, we don't until we get to 14.5. It's a 27 delta. But the 14 delta's got a 36. What if I buy deep and wide 1 month 2 strike vertical? Okay. It's going for about 24 cents. It's going for 24 cents for 20 March expiration, 23 days out. What if I go out to April? Okay. What about 14, 16? Buy deep and wide 1 month 2 strike vertical. That one's going for 50 cents. 50. You want to buy 51.5, selling 50.8. Not bad. Okay. So now we're saying, look, you're buying it for 50, sell for $1, sell it for 70% gain. That's what you're looking for. And that doesn't have to get to 16 in that case, but it may have to 14, 16. It's going to have to get up here close to 15, right? And then if we can get to 15, that spread's done, right? You're out. Or this one here, $1 wide, you're probably looking for 50 cents on it. In that case, we need to get to 14.50-ish, and you're done there. Either way, either out at the prior high, 15.30, or out at 14. You can decide which one you want to do. Both are pretty reasonable. All right. How are we doing, Garrett?
Good. How are you?
Pretty good. What are you watching today?
I have been watching the back end, lower end stuff like Aries, Blackstone, stuff trying to just kind of cover today. So that's kind of been the focus. 1.5% moves. Not a whole lot of action there.
Uh-huh.
And then CoStar, CSPG, or whatever the hell it's called. I'm blanking on the name of it. Nice little move breakdown today, which is what we were looking for. The stock is down. Where are we? CSPG and CSGP. Jeez,
CSGP.
I can't do it.
Dude, I